Hey guys, how's it going? Let me go and set up the room real quick and then we can get started with our mentoring session. So let me just get this set up right here. All right, let me get this link sent out to all you guys here in the premium real quick. All right, link is sent out. All right, I'll give it a few minutes for people to make their way in. There's a lot of people still making their way into the room right now. So I'll give it a few more minutes, and then once everyone's in the room, we can get started with our analysis. So let's get started here. So yeah, guys, welcome to the group mentoring session. Basically, this is a Q&A session with you guys. So if you guys have any questions, feel free to drop your questions in the chat, and then I can answer any of the questions that you guys have regarding any of the K2 strategies, trade psychology, pretty much anything that you guys need help with. This is pretty much a session for you guys. So I'm just here to answer questions for whatever you guys need help with. I'm not looking to take any trades. The market is closed right now. So even if you guys did have questions regarding current trades, there's nothing available for US 30. The market is currently closed for the next hour or so. So yeah, if you guys have any questions, feel free to drop them in the chat. I will be going down them in order. So whoever's questions get asked first will be answered first. So all right, let me just give it a few minutes. Hey Matt, how's it going? All right, cool. Looks like people are still making their way in. So it's 2:05 right now. The session was supposed to start at 2, so it's only 5 minutes in. We'll give it some time for people to make their way in. What's going on with MT4? It just keeps logging out and logging in. The market is currently closed right now, I think, for both Forex and for actually Forex is still running. So it looks like Forex will probably freeze in about an hour. I think it closes from like 3 to 4. But I think we're good for right now. Hey Kenny, how's it going? Alex is asking, Alex, is this the same Alex? Yeah, Alex, I mean, I'm just confused with your question because you said, is there any information or training on the K2 website? You would know that because you are on the website and you've looked at the training. So I'm confused like where this question is going with. I mean, we've talked about it before. Yeah, I'm not sure what your question is, Alex, because you like when you I don't know where to start with this because you know yourself that there is training on the website. So I'm not sure, is your question, are you asking for something different? Because you're asking, is there any information or training on the K2 website? Everything is on the website. So I'm trying to figure out what exactly are you. Alex said, my bad. Training for the strategies, my bad. Yeah. So Alex, I'm still confused with your question because we've talked about here. I'll even pull it up for you. Everything is on there, Alex. I'm not sure if you haven't gone on the website. I mean, the last time we talked, you said you went over all the training. So I'm not sure if you're like lost on the website or something. I'll pull it up for you here. Like, let's see if I can pull it up for you. I'm just a little confused. Like, I'm not sure what you're referring to regarding the So Alex, let's see. Let me see if I can pull it up for you. So I mean, you've been on the website, Alex, so you know that there's a whole area of trading of there's like a ton of videos here, Alex. So I'm not sure like where your question is, but if you log into the website, this is what it looks like. There's a ton of videos here with all the strategies. There's videos with all of the webinars. There's videos with, I mean, pretty much everything here. So I'm not sure where you confused with, Alex. I mean, if there's anything else that you're looking for, I guess you could be a little more specific. But I'm not sure what are you looking for. So, okay, so you said, yeah, I mean, did your question get answered, Alex? Because I just want to make sure, you know, what you were asking for. Because if you're confused, I can. Okay, gotcha. Yeah, you said no longer confused. I guess I checked the wrong area. Because if you log into the website, I mean, everything is listed here, Alex. Okay, cool. Yeah, I just want to make sure that your question is answered. I don't want you to be confused. If you're confused with how to find the videos, I mean, you literally just log in and then the whole list is there of everything. So if there's anything else that you need help with, you know, regarding navigating through the website, I don't think there should be an issue because once you log in, it goes straight to that page where all the videos are. So yeah, I mean, if you're still confused, just let me know. And if you're, I mean, if you're confused, Alex, just like, you know, be straight up and tell me that you're confused so I can like navigate through the website and show you exactly where. Yeah, no problem, Alex. All right, glad I could help you with that. Let's see what the next question is over here. Hey, Lala, how's it going? Lala said, how do you determine how to set your stop loss and take profit? Lala, so it depends on what strategy you're applying. Do you have a specific strategy that you're applying? Because all of them have specific TP stop losses for them. So if there's one that you are looking at or one that you need help with, I can help you with it. I just need to know which one that you're asking about because all the strategies are different, whether it's the SR strategy for Forex, whether it's any of the Forex strategies, whether it's US 30, each strategy has their own specific requirements. So depending on which one that you're asking about, I can go over that in detail, but I need to figure out which one are you asking about. So I'll give it a few seconds for you to respond to that. Okay. So Lala said, no, I put 30, 60, and 90 points from entry. Sorry, Lala, I'm not sure what are you referring to because we don't have anything where it's like 30, 60, or 90 points from entry. Do you have a strategy that you're like, you want to set the TP stop loss for? Because each strategy has its specific TP and stop loss. So there's no set 30, 60, and 90 points from entry. That's kind of a big push. So I'm not sure how far. I mean, depending on which one you're applying, if you're applying the scalping strategies, I don't think there's any strategy here that has it set to those specific parameters. Like for the 1 minute, generally our stop loss is around like 300 pips. On the 3 minute, our stop loss is generally 500 pips. And on the 10 minute, same situation here, it's fixed at 500 pips. So we don't have anything that's set at 30, 60, 90. I'm not sure if that's like one that you put like yourself, but we don't have anything that is set at that specific stop loss. So is there a specific strategy that you apply where you set your TP or your stop loss at those points? Because if there's a specific strategy, that's where I can help you from. Because thing is, like, all the strategies are rule based, so it's kind of hard to mess up unless you're like going off track from like what the strategies are actually supposed to be applied as. Unless you're applying something like the intraday strategy where you place it at the previous swing, but that's always going to be a variable. So like, for example, if you're applying, you know, the intraday strategy, here, I'll just delete this stuff off the chart and just use this as an example. So if you were to take this trade right here, and I'm just going to use the intraday strategy as an example. Actually, we don't even have an entry right there. Okay, so this right here, we'll go to this one because this is the most recent entry. So for example, right here, if you're applying the intraday strategy, basically you're matching the momentum signal with the trend meter. If you were to enter it there, you would place your stop loss at the previous swing, which should be right there at 157, and your TP would be equal distance away, right? And would hit TP right there. So, I mean, it just depends on which strategy you're applying, Lala. I'm not sure like where you are getting those numbers from, but I don't think there's any strategy where we have it specifically set to those numbers. So, yeah, I mean, if you could be a little more detailed with your question or like with what strategy you're applying, I can tell you how do we determine the stop loss for that. But we don't have anything that's specific for the information that you provided. Aside from the 1 minute, so like for your response here, you said that you put 30, 60, 90 points from entry. That's you should never really use a fixed stop loss like that, unless like there's a specific strategy that you know that works with those specific parameters. Because the market's not always going to move the same, right? If you're trading during New York session, it's going to be a lot more volatile compared to Asia session. You know, like during Asia session, your stop loss would probably be like half the size as your New York stop loss. And then if you're trading London session, your stop loss might be wider than the New York session because it's a lot more volatile. So I think, well, if you could give me more information, Lala, I can help you. It's just I don't have any information from you. You're just putting stop loss at like random points at 30, 60 points, 30, 60, 90 points away, which I don't recommend. I've never taught anybody to do that. And I don't think that's necessarily a good place to put it because it just depends on like when you're trading. So if you can like specify, you know, what exactly you need help with, I can direct you towards that. But there's nothing specific with regard to those stop losses. So let's see. I'll let you like give more information. I'll wait. Like if you want to give more information later, we can come back to your question. But you know, determining stop loss depends on the strategy. If you're applying a specific strategy that sets your stop loss at the previous swing, then it would be variable. It'd change, right? It's not always going to be a set 157 pips, right? Like for example, right here, it's 157. Let me see if I can find another one over here. So that's 157. Sorry, I'm trying to figure out where was my thing left. Yeah, so that's like 157. There's like another entry over here, which would be, I mean, and this is applying the intraday strategy. So this is specific to this specific strategy. I wouldn't take this trade here, but just using this as an example, you can see that the previous one was at 157. This is at 257, right? It's not always going to be the same if you're placing at the previous swing, because each time it's going to be a bit different. And that's where it would be for this one here. I wouldn't take this trade because it's so close to the session high right here. Usually it bounces off it. And that's kind of why I wouldn't take it there, because you can see price came right back down. It rejected off this session high. And this was a session high that it rejected off when it opened. So I'm just showing you, for example, like, you know, depending on what strategy you're applying, if you're placing it at the previous swing, the swing's always going to be at a different point. It's not going to be at a set 300 pips or a set 600 pips. Because if you're using 30 to 60 points, that's a pretty big gap. Because like, for example, here, if you were to take this trade and you put your stop loss at 300, that'd be solid. If you put it at 600, that's pretty wide. I mean, I wouldn't do that for US 30 specifically. So it just varies. So yeah, Lola, if you want to like give a little more details as to like what you're trading, like you can tell me like what you're trading, when you're trading it, what strategy you're applying, on what time frame, right? Because these things are very important. You have to determine what you're trading on. Like you're not going to have the same stop loss for a 1 hour than you would have on the 1 minute. It's going to be totally different because each range is going to be totally different. Like for example here, let me just show you here. So this is I'll go to a clean chart. So here's like the 1 hour, right? If you're trading on the 1 hour here, your stop loss is like, this is 5,000 pips, right? So you're doing 500 points away. So if you're comparing, you know, the 1 hour over here, which obviously would hit TP, this is the same strategy, the intraday strategy on the 1 hour. This is a 5,000 pip stop loss. It's a 1-to-1, but it's a 5,000 pip stop loss. Vice versa, if you go to 30-minute, it's not going to be the same, right? Again, right here, we have another entry for a buy. This is going to be at about 1,000 or about 2,000 pips, right? 200 pips is going to be equivalent to 2,000 pips. So as you can see, it's widely different. Like the 1 hour is at like 5,000 pips. This is at 2,000 pips. If you go in the shorter time frame, like the 10-minute, and you see the same entry there again, your stop loss is going to be a lot tighter at about 1,000 pips. So, I mean, it just depends on like what asset you're trading, what time frame you're trading on, what strategy you're applying, what time you're trading. I mean, it really depends, right? Your stop loss isn't always going to be the same place. I mean, a basic place to put it would be at the previous swing, but that's not necessarily always going to be the best place to put it, especially if you're trading. I mean, it seems like you're trading on the higher time frame. If your stop loss is that wide at 300 to 600 to 900 pips, because you're not going to do that on the 1 minute, obviously. Like for example, right here, for the 1 minute, if you're taking any of these buys here, that would appear, like for example, this one, right? If you're taking a buy right here and you put your stop loss at the previous swing, it'd be at about like 500 pips. So this would make it a bit different, right? I mean, it still works perfectly fine. It's just you're on different time frames. So you could go from the 1 minute at 500 pips to the 10-minute at 1,000 pips to the 1 hour at 5,000 pips. It just varies by strategy, time frame, time of trading, asset, stuff like that. So yeah, Lala, if you have any questions regarding, or if you can be more specific, I can give you like a breakdown of like what you would need. I would just need some information because you asked a pretty open-ended question with regard to where stop loss should be. Let's see. Lala said I'm on London, US 30. I don't know. I scalp and this works when I have to sleep. I guess God takes care of babies and food. Yeah, I mean, if it works, Lala, then go ahead and use it. But again, like it would depend on like which time frame you're trading on, because you can place your stop loss at the previous swing. Like if you're on the 1 minute, I'm pretty sure you're not trading on the 1 minute. If you have your stop loss at like, or maybe you are, I personally don't know, but you trade during London where the volatility is actually pretty high. So yeah, if you're trading during London, volatility is going to move a lot faster. So where would your target be though? I'm curious like where your target would be, because if your stop loss is at 300 to 600 to 900 pips, I'm like curious as to like where, and I'm curious like as to what strategy you're applying. Unless you're doing like your own strategy or like a combination of your strategy and the K2 indicators, like a lot of other people do. I mean, your stop loss would always be based on what strategy you're applying. Like for example, if you want to place it at the previous swing, there's like different ways to do it. What you can do is so let's see, you trade during London. We can go to like London time over here. Okay, so this is like, we'll go to like middle London session. Like, I mean, I would still, sorry, I would kind of, I would still kind of need to know like what you're applying, because I can show you an example if you have like something that you're applying, but there's a lot of different ways to set your TP, stop loss and stuff like that. Like for example, I usually don't trade off London Open, even if I do trade, but like for example, right here, this is London right here. I'm just going to use this for an example, and I'm going to show you different places where you can place your TP stop loss. Like for example, if you wanted to take this trade here for a buy, you can place it at the previous swing, which can be here at 200 pips, or it can be down here at 700 pips, right? Or down here at 900 pips. I mean, it depends on how far you're like trying to shoot for or shoot from. But it's like, it just really depends on where you plan on putting it, right? Because there's like different places you can place it. What I would recommend is if you're going by rule of thumb, I would probably place it at the previous swing, depending on how far your risk is. I probably wouldn't put it here because it's too close at 200 pips. This is a little better, around 500 pips. I like to use whole numbers. So I don't go straight, I don't go like directly at the previous swing. I put it slightly below it to cover, because sometimes what happens is price will come back. It'll retrace to like the swing. and then it'll come right back up. Because what happens is, the market makers, institutions know that this is where everybody places their stop loss. That's why I usually like to have it at specific places. Yeah, so I think the rule of thumb would probably be at the previous swing. I usually wouldn't put it at the most recent one. I would put it at the second one, and I would also put it slightly below it. So like, for example, right here, this would be at like 480 pips. This would be at 500. I'd probably put it a little lower, like on 600. Because what happens is a lot of market, like pretty much all the market makers, institutions know exactly what like retail traders are doing, right? Everybody places at the previous swing. So what you see sometimes, you'll see price pull back to the swing, like right here. It'll stop people out and then it'll shoot right back up. And then sometimes what happens, and that's why we look at retail sentiment a lot. So like, that's why we use this, and we like to trade opposite of everyone else. Right now, it's not very one-sided. Right now it's 58% short, but it's still like neutral. I usually don't want to trade the direction of everyone else because, for example, if this happens here, it'll stop people out because generally people place their stop loss at the swing. It'll touch it. Like, I'm sure this has happened to you and like a lot of other people here, because it's happened to me a lot. It'll come down, hit your stop loss. It'll come back up right here. And then when you try to re-enter, what happens after that? It drops even further, right? And where does it drop from that point? It drops to the next swing right here. And it does the same thing, right? It goes right there. It stops. It goes like slightly below it. Like it goes like right below it right here. And then what happens from that point? It shoots all the way up to TP. And I'm sure this has happened to a lot of you guys before, because it's happened to me a lot. I've been trading for years and I've seen this happen like all the time. That's why I generally don't like to trade where the majority are trading, because you'll get caught in a lot of traps like this, where you get stopped out and you get greedy and you want to revenge trade, you re-enter the trade, it comes back down and it stops you out again because the true move hasn't happened yet. And then when it drops down here, what happens from this point? Shoots all the way back up. So it's something that you guys don't want to get caught in. That's why generally, if I do place my stop loss at the previous thing, which I do sometimes, I don't do it anymore because I trade on the shorter time frames and I try to get in and out pretty quickly, so I don't get caught in this manipulation. When stuff like that happens, I usually place it like slightly below. But yeah, that's somewhere you can start with, Lala. So hopefully that answered your question. And sorry, it was like difficult for me to get around to your question. It was just, I base all of my trades off specific strategies. So if you're doing a combo of things, I think rule of thumb would be at the previous swing, but not directly there. I'd probably go to the second one and slightly below it. So hopefully that helps. Let me get to the next question here. All right, so there we go with that right there. Kenny's asking, is there certain things that you look at before a trade during London session? So I don't trade London session at all, Kenny. So I personally don't trade London session. What I would recommend, well, I used to trade it before. What I would recommend is to wait at least like an hour, 2 hours after London session opens. So let me show you real quick why. Because the market moves kind of funky up around that period. So like, I'm gonna mark it up from, let me just turn everything off. Actually, let me go to a clean chart. I'm gonna leave this alone because I don't want to mess with it. This is our 1 hour chart. I'll go over here to the testing chart. So let's go to midnight over here. So midnight is when London opens my time. Right over here. All right, so like around market open, I usually would wait at least maybe 1 or 2 hours before I start actually looking at London session. I don't trade London, but when I did, I would wait at least 1 or 2 hours, and I'll show you exactly why. Because you'll see stuff like this happen in the market. Okay, so let's just go back to London open. All right, so you can see right here that market was kind of just ranging, right? Didn't really move very much. And then right here, it kind of looked like price was going to go directional. So if you let price run from market open, it looks like price was coming down from this point, right? Looks like it was coming down, but then you get a lot of fake outs. So if you just follow it through, let me just back up a little bit. If you follow through right here, you can see it comes down and then it swings all the way back up, right? Between this period right here. So as you can see, there's not really much of a clear movement here. That's why I usually don't like to trade during the first hour or 2 hours. So for example, right here, it pushes down, it swings back up. And then even during this period, it kind of moves around a bit, but it doesn't really move that smoothly. So you can see price goes up. And this is usually where I start to look for trades. Like, I mean, I don't do it anymore when I used to. I would start looking like an hour in, I'd start analyzing the chart, and then I would start looking for stuff here. So around 2 o'clock, this is where the market tends to start moving a bit smoother. And you can see right here that it becomes a lot easier because it's in a clear direction, right? It's not like going back and forth like it did here. It went down, it swung back up. And then again, right here, it swung up and then it came right back down. Once 2 o'clock hit, it started to find its direction. And then right here, I think this is like midway. And this is one way that you guys can do it. Like if you guys are really curious how to trade during like certain sessions, what I would do is I would recommend analyzing charts every hour. So you can see right here, I had a direction and it consolidated a bit and then it shot back upwards. And then you pretty much just see where price moves from there. And as you can see, it has a direction, right? Like for example, right here, there was no clear direction. Over here, there was no clear direction. But right here, from 2 o'clock till 3, had a clear direction to the downside. Then from 3 to 4, clear direction to the upside. And then 4 to 5, clear direction to the bottom side. So this is usually why I don't trade until like, well, I mean, I don't trade this anymore, but when I used to, I would wait until like 2 hours later. So as you guys can see, it moves a lot smoother after the first 2 hours. Right here on market open at midnight, kind of just goes back and forth. The first hour after that goes back and forth as well. But right here, from 2 to 3, smooth move to the downside. 3 to 4, smooth move to the upside. 4 to 5, smooth move to the downside. And then from this point, this is now the opening of US session. So I'm sure you guys can see that there's a pattern there, right? And then around this time, I usually don't trade like from 5 to 6 because this is a crossover between London and US. And then this is when we start our live session around 6:30. So I'm sure you guys can see that there's a pattern right there. So, you know, back to your question, Kenny, I generally don't look for anything specific. I do look at fundamentals always. It doesn't make any difference whether it's London session, Asia session, New York session. I always look at fundamentals and I look at retail sentiment. It's the same process I do for whatever session I trade in. But for the most part, I think the biggest takeaway that you should use for London session is to probably avoid the first 2 hours. Once you avoid the first 2 hours, then the market will move a lot smoother between session to session. You guys can do this yourself. You guys can always just go to each hour and just mark up a vertical line. Because you can see right here from each hour, it shifts, right? Shifts down, shifts up, shifts down, goes sideways between the London to New York crossover, and then it chooses the direction again from there. So yeah, short answer to your question is I don't necessarily look at anything aside from fundamentals. And the fundamentals, the thing with this is the market's closed. So if you try to look at fundamentals during London session, this is not going to update. So you can see right here, these are the fundamentals from yesterday. It said the last update was at 5 p.m. Eastern, which is about 30 minutes ago when the market closed. So market is closed now. You would use the futures data here. This hasn't updated because the market's closed here as well. It's going to reopen at 3 o'clock or 4 o'clock. I'm not sure. Depends on the broker. Sometimes brokers open at 3 o'clock, but I think most brokers open at 4. It's closed for like 2 hours because the Forex market is closed from 3 to 4 as well. So yeah, Kenny, hopefully that answers your question there. But yeah, for the most part, I use the same analysis that I use for any other session, aside from skipping the first hour or so. All right, let's see. Next question is from Scott. So Scott said, Aisha, I'm not sure if you can explain why the buy signal at 10:40 Eastern that closed above the high was not a good entry. It dipped and hit stop loss. You didn't take that trade, but I missed the reasoning. So let's go to that time period. I'll go on this chart over here because this chart's one with all the indicators and stuff. So you said 9 or 10:40, which is 9, 8, 7. It's about 7:40. See. All right, let me go over here real quick and replay this. 7:40. So I personally don't see, well, I mean, depending on which strategy you're applying. So Kenny, do you, or sorry, Scott, do you have a specific strategy that you applied for this? I'm assuming you applied either the pivot scalp or the intraday, because I do see both the strategies there. There's no high-low entry here, so I'm sure that you didn't apply that, because this high right here was, okay, so you applied the intraday and you applied it on the 1 minute. So the thing with the intraday I'm not sure if you are familiar with how it works. The intraday, you would place the stop loss at the previous swing, which would be below here. Like I mentioned before, I like using whole numbers and I put it slightly below it. So I'd probably put this at like about 600 pips instead of 550. Let's see if it actually hit TP right here, Scott. So I don't think you're maybe not applying it properly. I mean, even if you have your stop loss like right at that low right there at 55, it still wouldn't have hit stop loss. So I don't know if you applied it differently. I mean, I wouldn't have taken the trade in general, because for me, I look for the triple confluence. I'm looking for 3 strategies, basically all of these 3 to line up together. So I wouldn't have taken it because it would have just fulfilled the intraday and the pivot scalp. So these 2 right here would have been the ones that lined up. However, I personally wouldn't, like, if you've been following the live sessions, I only take it when 3 of these over here would line up. So for me personally, I'm looking for trades that are not as risky. The thing with Monday is that you're going to see a lot of back and forth movement. You're going to see a lot of ranges, or you're going to see like big ranges. You're going to see what we call whipsaws. So like sometimes you'll see price go up and then it'll come right back down and then it'll swing right back up. So on Mondays, I'm usually pretty careful. I usually don't even trade on Mondays. So if you're asking me personally why I wouldn't take the trade, was specifically because not all of the strategies here lined up. For the intraday strategy, you put your stop loss at the previous swing. If you take the pivot scalp, it'd be set at 300 pips. But the intraday strategy isn't necessarily meant for the 1 minute time frame. For specific reasons, because it's just the way that it moves like pretty erratic, right? So like, for example, if your stop loss is too wide, like for example here on the 1 minute, even though your stop loss would be at like 600 pips, I probably wouldn't do that for the 1 minute because it's just too wide of a range. I usually like having stuff pretty tight. So short answer to your question is I wouldn't have entered it because I'm looking for these 3 entries to line up together. But let me see if you put anything else here. You didn't take it, just wondered. I think I would. Yeah, no, and that's probably the smart move to do, Scott. So like Scott said that he would have set his stop loss at 300 pips, which is a good idea because you want to have a tight stop loss, right? So if I was to take that trade using the pivot scalp, I would set my my stop loss right there at 300 pips because that's how that strategy works. However, one thing that I kind of mention sometimes, but I don't mention all the time, is I try to avoid trades when it's ranging. So for this right here, you guys have seen during the live session, I generally mark it up when I see prices in a range. And if you guys were following the live session this morning, like we were still on the live during this time. And if you just watch like the last couple of minutes of the live, because this was at 7:40, it was like 20 minutes before I went off the live, I was mentioning that I usually don't like trading when price is ranging within an area like this. And even if price was to close above it, I wouldn't have taken like a specific trade there unless it lined up with these here, because you get a lot of fake outs. So right here, the candle didn't even close above it. So generally what happens is you can see the pattern right here, Scott, right? Like if you just scroll back a little bit, you can see this area right here. Whenever price reaches the top of the range, you can see the pattern here. Price bounces off, right? Comes up, bounces off. So with this same situation right here, what's likely to happen? It's probably going to bounce off, right? And that's kind of what happened right there. It bounced off, came back down, and it just pretty much just danced within this range until it finally broke out of it. So there's different ways to analyze this, but like the main reason why I wouldn't take it was because it didn't line up with the other strategies. If there was a high here, or let me see if there's one here. Yeah, there's actually no highs that were broken here either. Price was kind of just in this range. And then when it broke outside of here, it didn't break above it. But you do see that there's a couple entries here. So there is an entry. Let's see, Scott said, so we need to see a much bigger candle. Not necessarily break the high, but close above the high. Because you can see right here that price didn't even break above that. It broke above the high, but it didn't close above it, right? So let me just go back over here. So this trade here, even though I didn't take it, it still would have triggered a lot of red flags. So for example, right here, price is within a range, right? You would need price to actually close outside of the range for it to classify as, breaking outside of this range. So there's no buy signal here. Here's the buy signal that you looked at. You can see that it literally rejected off the same high that we drew. So if you scroll a little closer, it didn't close above it. If it closed above it, I'd be more inclined to take that for a buy. However, it didn't, and it came right back down. So let's see if there's another buy signal here. There's a buy signal right there. So, there's like different strategies. If you remember the, I'm not sure if you know it, but if you know the SR strategy, this one right here, the zone strategy, basically for this one right here, you're looking for price to break outside a certain price point, right? So this is kind of like, if you're familiar with all the strategies here, this would all kind of make a lot more sense. But if you're not familiar with it, this is kind of where I'd have that confirmation, even though I wouldn't take a trade here, just, confirmation that price would probably be continuing higher because it finally broke outside of it. And then after that, it continued higher. So, or even if you didn't take that one. So for example, if you didn't take that one there and say you were waiting for price to break this high, because I probably wouldn't have taken that one either. If price was to break this high right here, so if I zoom out a little bit, let me just clean up the chart a little bit to make things easier to see. So as you can see, the range just gets wider and wider, right? But price never actually closes past the high. So if you wait for this right here, see how price broke above this, broke and closed above it, Scott? This is like one that you would probably take if there was a buy signal above there. Because if there was a buy signal above there, it would line up with all these three strategies. So it would be a entry for a high-low scalp. And that's if there was a buy signal here. There's no buy signal here, so I wouldn't have taken this, even if it came up, because it only satisfies this requirement. If there was a buy signal there and it satisfied this, and this, then I would take the trade there. So not necessarily, it doesn't necessarily have to be a bigger candle. It just has to close above the high. So if you see this here, and I don't know, we'll just use the other parameters, like for the pivot scalp. I know there's no entry there, but I just want to show you. So there you go. That's kind of what you want to look for. Not necessarily a big candle. And generally, if I see a big candle, I would just skip it. So for example, right here, Scott, you can see that we had this during the breakout, right? And if you remembered from the live session today, I mentioned that this would have been the breakout, but I wouldn't have taken it because it's such a big candle. If you see a big candle like this, and the way that you can determine whether it's a big candle is just to measure it. You can pull up the measuring tool. So this fits, well, I mean, it broke the high here, but it didn't close above it. So this would still not be or actually it would right here off this candle. So technically this would have been a good entry. So if we, but the red flag about this was that it happened during the opening candle. So we wouldn't take the opening candle, but if this was like at any other time in like during the day, this would be a high-low entry, right? Because we have the high right here. There's 5 candles, breaks above it, and you can take that for a long. But going back to what I was explaining earlier, the bigger the candle, the less likely I would want to take it. So like if you measure this candle right here, this candle is pushed up 600 pips. It's a lot bigger compared to these other candles here. So if you look at the previous ones, it's like 200 pips. And then again, right here, less than 200 pips. And then right here, even smaller. So it's such a big candle. And generally, when you see a big candle like this, it retraces a bit. So it'll do one of two things. It'll either retrace down halfway and bounce right back up, or it'll do a complete reversal to the downside. And right here, you guys know what happened. It came all the way down, and then it bounced right back up. So yeah, hopefully that helps, Scott. I mean, I know it's a bit confusing if it's like not something that you're used to. But like the more and more that you apply it, you'll start to see the same patterns reappear. So I think like one thing that I'm going to start emphasizing a lot more is to identify when price is ranging, because when price is ranging makes it a bit more of a riskier trade. So let me see this real quick. I'm just trying to see if there's like an entry here where price breaks out of the range, and then there's also an entry that's available there. So the price is ranging over here. It's kind of hard to tell over here because the market just opened from the weekend. So we're not really going to see very much, but I'm going to try to see if I can find one here. There's a range right here. Let's see. No, it's going to be hard to find. If I see one during the week, I'll try to show you guys what I'm looking for. But see if there was one last week. No. Yeah, I forgot what day. Last week, we didn't really take any trades. We took a trade on Monday and we took a trade on Friday because the market was like, there just wasn't any good entries. Let's see, there's a range right here. No, there's no entries. So if I see something, I'll show you guys an example. But you guys can kind of see what I mean about price being in a range and then trying to avoid trades that are within the range. Like use this for an example. Right, so like for example here, I probably wouldn't trade within this big range right here. But when price finally would break out of this range, because when it's in a range like this, it's it's preparing for a breakout to the either side. So we have a sell signal right here. You have a candle right here break below it. This would kind of indicate that price was going to continue further down because it finally broke out of the range and it would be introducing the high-low scalp. So if you took a short position right there, the regular parameter is 1030. You can see that it went straight to TP. So if I find more examples throughout the week, guys, I'll show you like real time. It doesn't really teach very much if we go back in time because you guys can see that we can kind of see what's happening on the chart. It's better when you guys see it real time because you guys can see my whole analysis when I break down like how I'm identifying the range and then how it breaks outside and how I would take a trade. But yeah, today's not really a good day. You can see how the market was kind of just going back and forth right here. Like if I turn off the pivots or the momentum signals, you guys can see how like messy this is moving here. And the problem with this is that the range is so wide that you don't really want to take trades within here. Because if your stop loss is at 300 pips, it's so easy for you to get stopped out before it moves in your direction. Okay, so that's it with that. Let me see the next question here. Hopefully that answers your question, Scott. If you have any other questions regarding that, feel free to drop another question, then I can go more into detail. But I think that's as far as I can go with regard to that specific entry at that time. So let's see. All right, scrolling up. Let's see what else we have over here. Okay, so we have another question from Orain. Orain's asking, hey, can you go over the intraday pullback strategy? Yeah, sure, Orain. So let me see if I can find one here. I mean, there's a lot here. With that strategy, I don't necessarily apply it on the 1 minute. I'll show you an example of how it works on the 1 minute, but it's not one that I would recommend using on the 1 minute because there's just too much noise. So, I mean, we can go to like I guess right here, this would be one. Oh, there's a couple here, but here, I'll show you. So this is a pullback, the intraday pullback strategy. So this is the K2 intraday, and I'll try it on other time frames that you can see. Or here, let me do this real quick. Sorry, let me go to a clean chart. That's not one of our trading charts. So there's a testing chart right here. For this strategy, you just need the momentum indicator and the trend meter. So see if I could find, okay, there's like one right here. I'll just go to like the first one that I see. All right, so there's one right here. Not that I would take this trade, but I'm just going to show you an example of how it works. So this is a K2 intraday pullback strategy. And this strategy wasn't necessarily meant for US 30, but it works on pretty much all assets because it's based off momentum. So first you want to confirm a valid K2 momentum signal. Second, you want to confirm K2 trend meter does not match signal. Lastly, you'll place buy stop, sell stop entry at momentum candle high or low. I mean, it just depends on like which one you're applying, right? Because if you're trying to take a buy, then you're going to place it at the candle's high. If you want to enter a low, then you'll place it at the candle's low. Or if you're here, I'll go into detail from it. It's going to be easier to understand with me actually showing you on the chart. So here's the requirements. After that, you're going to enter or set stop TP stop loss, set stop loss at previous swing, and TP equal distance away for 1-to-1. Okay, so let me just show you exactly what I mean, because it's harder to show you by text rather than just showing you how it works on the chart. So looking at this right here, you want to confirm a valid K2 momentum signal. Right here, we have a valid sell signal, and it's valid because we have a red sell signal within a red candle. So we have that requirement number one. Requirement number two, you want to confirm the K2 trend meter does not match the signal. So this is red and this is green, right? So with that said, we know that the trend is going upwards. So what we're looking for is to take a buy. This basically indicates that price is pulling back. It's like a pullback, right? That's why the strategy is called intraday pullback. Because if you're doing the regular intraday, you want the green and green to match. You want green and green, then you take a buy. If you're doing the intraday pullback, you want it to be opposite because it's pretty much the same strategy, except you're looking for a pullback instead of momentum push in that direction. So looking at this here, you can see how price is pulling back. That's going to be requirement number one. Requirement two is met. Next, you'll place a buy stop. So this is where I was trying to explain to you guys the difference between the buy stop and the sell stop. If you're looking for a buy, then you're going to place a buy stop. If you're looking for a sell, then you're going to place a sell stop. So right here is a momentum signal. The trend meter is green, and you're looking to take a buy here because you want to go in the direction of the trend. So for example, here you set a long position right over here. The swing would be somewhere around here, around, we'll just do like, I don't know, 400 pips. And basically what you're doing here is you have a pending order. So you're waiting for this pending order to get filled when it swings up. So right here, you have a pending order. It's not filled yet. When it finally does swing up, it's going to automatically fill. So right here has not filled yet. Right here still hasn't filled yet. Right here, it's filled, right? So what you're doing with this strategy is basically getting a head start for an intraday entry. So right here, you have the entry set, and then you pretty much let it run. And there you go, full TP. So hopefully that makes sense right there, Alright. This isn't one that I necessarily recommend applying on the 1 minute because there's a lot of noise, and the momentum signals aren't as strong because you get a lot of back and forth signals here off the 1 minute. Generally, I would apply this like on the, I guess you can apply it on the 10 minute or anything higher than that. I know sometimes people do it on the 5 minute, but again, you know, the signals here, this is what I mean. So you see how these signals here are swinging back and forth? You don't want too many momentum signals. You want like a few. So right here on the 10 minute, here's like an example of that, right? Let me just go over here real quick and I'll show you one here off the 10 minute. All right, so here's the same strategy on the 10 minute time frame. You confirm a valid K2 momentum signal right here. You confirm it doesn't match the trend meter. So with that said, you enter a long position right here at the high of this candle because you're looking for a buy. You place your stop loss at the previous swing. One thing that can help you is you can turn on the high-low indicator. And well, this isn't really going to help because, well, the problem with this is that you guys are going to have to identify where the actual swings are. So you can see that price is ranging within this area. I wouldn't consider any of these as swings because you don't see any actual swings in price, right? Price is just going back and forth within this range. The swing would actually be down here. So if you put your stop loss down here, that's where the swing's at. It's about 170 pips. All right. And this is something that you guys pick up along the way. It's not something that you'll get like right away, because just because this is a high-low indicator here, this doesn't necessarily mean that price is actually swinging. So this is where it comes into play, where you have to actually identify where price is ranging. And it's pretty clear to see, like, price is literally just going sideways. If you turn off all the indicators here, you guys can see that it's in a range, right? There's no actual swings going back and forth. I mean, some people might consider this a swing, but I wouldn't consider it a swing because it's literally within a range from that point. So let's just turn everything back on. Going back to the strategy right here, confirm a valid signal right there. Trend mirror is opposite. You put the buy stop at the high of this candle. You let it run. And you can see that the trade still hasn't been filled yet. The trade doesn't fill until it actually pushes above here. That's why you have a buy stop, because you have a pending order so that when price actually reaches this point, it'll automatically fill for you. So you pretty much just wait for this to bounce around. And you can see price is still ranging within this area. Finally, the trade finally filled right here, right? So at this point, you're now in the trade. You're in some slight drawdown because price triggered it, and then it came right back down slowly. And if you let it run further, you can see that price kind of goes around here. And this is where it goes around. Actually, so looking at the time here, if you guys see why I wouldn't trade during London Open, because this happens where price has a back and forth movement. So around this period right here, I wouldn't have taken this trade because it happened around London Open. I don't trade London anymore, but even if I was to trade it, I would have skipped this one right here because it happened. You can see the time from 23. This line right here was London Open at midnight. And I usually don't trade for the first 2 hours. Right there. So I'll try to find a better example for you guys, but this here, I mean, obviously you can see that it didn't work out. And it didn't work out for a specific reason because, you know, I personally wouldn't trade around this time. And if you guys want to go back and see my analysis for why I don't trade during London Open, just go back and rewind the replay later. But I'll see if I can find a better example for you guys here. Generally, this strategy you want to apply during like New York session. This strategy was initially made for Forex. So if you want to trade Forex, I mean, you can. It does work for US 30, but you have to make sure that you trade around a specific time period. I would recommend trading during New York session. So like, let me see if I could find one around New York session over here. Let's see. And one that's not on a Friday. So New York session and not on a Friday because market isn't going to be open for the full time. I was going to look at this one right here, but December 3rd was Friday. So you can see that the market actually closes around this period. And it was NFP as well. So let me just go around here and see if I can find one around New York session that was not around some weird period of time. See if I could find it. This is Asia session. You can see the time period right here. This is where Asia session started. So I wouldn't be looking for any trades around this area. Let's see if we can find one over here. So here's kind of like one right here that, I mean, I don't apply the strategy by itself, but if you were to apply, I'll show you an example of like US session over here. So this is at, but then again, you know, there's always going to be times where it's going to be risky. Like for example, right here, we don't take trades at opening. So 6:30 right here is when the New York Stock Exchange opens. But for example, if you're trying to trade pre-market, and this strategy is not, you know, like I mentioned before, it's not meant for US 30. If I show you this on like Forex pairs, it actually works a lot better. And the reason for that is because there's a lot of times for US 30 where you probably don't want to trade it. But let me just see again right here, if there's another time period where we can. Let's see. This right here. See, this is where it becomes a little tough because the thing is, this is again in a range. And the problem with US 30 is I don't like, if you guys ever see when I trade US 30, I never put my stop loss this wide. I was going to put it back here, but you can see how far it's a 2000 pip move, which is way too big. Thing is, you're probably not going to see that the move complete until like the next day. I mean, we can try to let it run here, but I don't think it's a safe trade because it's too big of a move. I mean, it does end up hitting, but this isn't necessarily one that I would want to take. And you can see that a lot of the weird movements here happen around opening price, right? So market open right here at 6:30. This is the pre-market drop, and then it swings right back up. So what I would recommend, Orion, if you want to apply the strategy, I don't really recommend applying it for US 30. It probably might work better on like the shorter time frames, actually, now that I think of it, because if you're trading US 30, you want to be trading within the New York session. If you're trading it on the 10-minute, you're probably gonna be holding on to this trade past the session. So like this right here hit right away. But if you look at a lot of other entries here, they don't always hit right away. I mean, there's a couple here that would have hit, like this would have been good. Sorry, not that one, this one, I mean, this one would have been good. Yeah, like B said, maybe 5-minute would work better. I've actually never applied the strategy on US 30. So that's why it moves kind of weird, but let me check the 5-minute as well. Or let me scroll up real quick. All right, so B said, would you want the fundamentals to not match either? No, so you want the fundamentals to be in the direction that you're trading in. So if you guys remember my checklist, I always look at fundamentals and retail sentiment first. So that's another thing that comes into play. So for example, if you're looking for any of these strategy again, any of these pullback entries, you would want to know whether fundamentals are bullish or bearish. So like for this morning, it was pretty much it was pretty much bullish all morning. So if you took any of the pullbacks over here, looks like a lot of them would have hit. So let's just go from this morning. From this morning here, this is London, and then this is the, I mean, there wasn't even any entries here for New York. I mean, technically this one right here at 840. So B, yeah, thanks for mentioning that, the 5 minute. But guys, if you guys want to apply the strategy, I'd recommend you back test it first, because this strategy, like if you look at when that strategy was released, that was released like about 4 or 5 years ago, and that was when we were trading FOREX. So that was before I even started trading US 30. So you can test it if you want. I don't recommend applying it right away, but here's an example of the 5 minute. So this came up today at 8:45. So 8:45 right here, this would be the pullback entry. You have a momentum signal there. It's opposite of the trend meter. You have your buy stop right there at the high of that candle. And again, right here, this is like, you know, like I mentioned before, if you look at any of my US 30 strategies, I don't go anywhere past 1,500 pips. If you put at the previous swing right here, this is like pretty far off. It's already at 1,000 pips. So if you bring it down here, this is like 2,000 pips. I for sure would not put the stop loss this low. And, you know, going down here to the other low, it's like at 3,000 pips. So, you know, maybe this strategy would be better even on the 1 minute. But like I was mentioning before, there's a lot of noise on the 1 minute. 5 minute might be better for you guys, or even the 3 minute. So I personally would not put my stop loss anything lower than, especially on the 5 minute, anything lower than 1,000 pips. And it works, but this is something that you guys would have to test out. So just a reminder, if you guys want to apply the strategy, this strategy was meant for FOREX. It's not meant for US 30. A lot of the strategies that we use now are specifically for US 30, but I mean, they still work on US 30. It's just a little different. You're just going to run into like not so great trades. So there's one right there that happened today. Let's see if there's anything else that happened the day before that. Not Friday, but probably the day before that. All right, so this is the second. Yeah, so I mean, it looks like it does hit. It's just you got to keep it within like the specific period of US session. So the thing with this is that I don't know what the fundamentals are at this during this. I think they were bullish. I can't remember. Like, if you guys can probably, we'd probably have to go back and look at the session from the second. But looking at this right here, I'll just mark up US session so you know exactly where to look for trades. US session was from 5:30 till about noon. So we wouldn't take any more trades after this. But yeah, between this whole period right here, this is when the New York market technically opens 5:30. The stock exchange opens right here at 6:30. So going over here, applying the same strategy that we were looking at earlier. Actually, this wouldn't even apply because it was both red and red. This wouldn't apply because this is green and green. Okay, this right here would actually apply. So this one right here wouldn't apply because you need them to be opposite. These are matching. This wouldn't apply because these are matching as well. This right here would apply because this is a sell signal and this is a green trend meter down here. So what you would do is enter a long position right here. Stop loss would be at the previous swing, which would probably be, I mean, I guess right there. We'll probably set that to like 800 pips. But even at that point, it's still, I don't like having stop loss that wide, especially on the 5 minute. So looking at this right here, if you were to let that run, you can see that it didn't fill yet until it came up. So for example, it came down first and then it came up. So when it came up, it would have filled at this point, and then there would have shot up to the TP at that point. But yeah, I mean, if you guys want to play around with it, I don't recommend you guys apply this for US 30 until you've actually tested it. I haven't tested it, so I can't tell you guys if it works well or not. I was just showing an example of how the strategy works. This is probably a bad example for me to show you on US 30 since it wasn't based off this asset. It was based off FOREX. So if you guys want to use it, feel free. But I would recommend doing like a pretty deep back test before you guys actually apply it, because I haven't back tested it, and you know, I have no experience applying this strategy on US 30 specifically, because this strategy was created like 5 years ago. It still works. It's just not one that I necessarily apply anymore because I trade US 30 by itself now. Yeah, Orion. And if you find like good results, just let us know. And then if you run into issues, let me know and I can help you back test it as well. Because I'm sure like other people in the group would want to have more tools under their waist with regard to what they can use as confluences. But like for me personally, I just use the I use these strategies. The high-low scalp. We're probably gonna make this official. It's just I need to figure out the TP stop loss is set. So I think this TP stop loss is okay, the 100 to 300, but obviously I don't want it to be a bit tighter because it's just a lot of people don't like the 3 to 1. I personally don't like it either, but it's what's been working, so that's why I've been continuing to use it. But yeah, these are the strategies that I use currently myself. The other strategies work perfectly fine, but this specifically works well with US 30. Other than that, let me see if there's anything else right here. Sorry, B, I missed your other question. So yeah, B said, what would be the best time frame to do intraday pullback? So I would, if you're just applying this strategy by itself, like alone with nothing else, and so going back to like what I was saying earlier, I haven't applied any of these strategies on US 30. This strategy is technically a Forex strategy, but I've been using it as a confluence. So I never use it by itself on US 30, but I do use it as a confluence. So like, for example, I don't use any of these by itself. I use all of them in confluence with each other. But if you were to apply it by itself on Forex, we would do it on the 30-minute. I would recommend doing it on 30-minute for US 30 here because it's such a big move. So let me see. I mean, it still works, but it's not one that I would necessarily like to use on here. 30 minutes like too big of a range too. So for example, if you were to enter this for a long, like your stop loss would be so far off, 2,000 pips. That's way too far. Maybe the 10-minute. Let's see. Yeah, I mean, the 10-minute looks fine here for US 30. Like I mentioned earlier, guys, I don't apply this on US 30 at all. I just use it as a confluence. But if you were to apply it on the 10-minute, like one thing that you want to keep in mind is a stop loss, right? You don't want to have a crazy stop loss on US 30. Like right here, your stop loss would be about 1,000 pips. It's still kind of big. It's like 1,200 pips, but it's doable, right? But I wouldn't want to risk it on here. So guys, a lot of these strategies here that you guys are, or this is not daily, the intraday. A lot of these strategies here that you guys are looking up, like all these older strategies here, let me pull up the strategy videos over here. So here's the course. Basically, a lot of these strategies that you guys are looking at, these older ones, these are all meant for Forex. If you look at these videos here, they're all explaining, let's see if I can pull it up real quick. Yeah, like this is like for GBP USD, right? Like none of these strategies were created for US 30. I just started trading US 30 about a couple years ago. But all these strategies here, strategies that you're looking at are meant for Forex and they're meant to be used on the higher time frame. Like you can see here, we were trading on the daily, we were trading on the 8-hour, we were trading on the 2-hour, 30-minute, 4-hour, etc. The problem with applying these strategies on US 30 is that they move completely different. You guys have to keep in mind that Forex is a ranging asset, right? For Forex, price goes back and forth pretty often. For US 30 is a directional asset. So for example, you have to trade this during a specific period. Like you have to trade this during US session. I mean, you don't have to, but it works best during US session. Like for example, here, you can see the time where this price was ranging. This was obviously not US session. This was Asia session. And then you trade it during US session right here, 6:30 up until noon. You can see that price is actually moving directional. So for these strategies here, The best time frame that I would recommend applying this on Forex. I wouldn't recommend applying it on US 30 by itself because, like I was mentioning before, the ranges on here are too wide. I mean, unless you're trading like a 0.01, you still wouldn't want to have your stop loss so far out. Like if you don't put it at this previous swing, let me just go over here real quick. Because if you remember earlier when I was discussing, I usually don't place it at the most recent swing. I would place it at the second swing. So for example, right here, if this is where you're going to place it, this is at 1,600 pips. If you place it at this swing over here, this is at 2,700 pips. So this right here would be, I mean, it's, even if you want to put it down here, it's like super far off. So I personally wouldn't recommend applying any of these Forex strategies on US 30. If you're trading US 30, I would recommend just sticking to the ones that I personally use because those are the ones that I've actually tested and they're meant for US 30. Back to B's question over here. B said, what would be the best Forex pair that the strategy if you were going to use it? I'm curious. I would use it on the major pairs and the JPY pairs. So you want pairs that are actually moving and you want the ones that are moving smoothly. So let me just pull up your USD real quick. So basically any of the major pairs, which would be anything paired with US. So odd USD, Euro USD, GBP USD, NZD USD, USD JPY. And I think that's it for the majors. Otherwise, the JPY pairs, I would probably stick with odd JPY. So AJ, EJ, and GJ. Those are the main pairs that I would trade it on. So like, for example, here, if you're applying this on your USD, I'll show you an example right here. You can see that it's a lot easier to catch them on here because these move specifically in the way that we needed to for these trades to hit. So like right here's a previous swing, it's only 5 pips. And this, you guys can see the difference, right? This right here, the first swing is only about 5 pips. If you put it the second swing, it's still 8 pips. So I probably would put it a little bit higher. Or I mean, if you want to put it close like that, you can put it there and have it to like about 10 pips. And then if you were to let it run, you can see that it has a lot of this, a lot smoother move here. But I mean, it just depends on which time frame you want to trade it on. Let's see, B said, would you not be looking at it on the 30-minute? I mean, you can use this on the 10-minute or the, let me see if I can pull it up again. Did I just close that box? So this strategy right here, you can use it for the shorter time frames too. Let's see if I can find it over here. Scalping strategies. I think we do have the scalping strategies over here somewhere. But yeah, I mean, just going back to what you're saying, this strategy was meant for like 30 minutes. Like you said, yeah, 30-minute here. If you were to apply it on the 30-minute, see like something like this right here. This would be an intraday entry. So looking at this right here, pretty much the same strategy, except it's done on Forex. So, I mean, we would just take off US 30. And obviously you would need more requirements. Stop loss at previous swing. CP. So right here, you'd place it at the previous swing, which should be right here. You put it slightly above it. So like I mentioned, I like to use whole numbers. So I wouldn't put it at 20. I'd probably put it at 25 because I'd like to give it a bit of some space there. And if you were to apply right there, full TP off that. See if we could find another one over here. That's a full TP off the intraday. There's no entries here. These are opposite. These are opposite. This would be another intraday right over here, it looks like. But if you guys are applying these strategies, you guys got to also keep in mind that you guys have to follow the rules for this specific strategy too. So like one rule that we use is don't trade during news, right? So for example, we have an entry right here, but there's no news around this period, right? There's no news right here. So this would be okay to enter. You place your stop loss at the previous swing, which would be right here. I like whole numbers, so I'd probably move it to 20 pips instead of 15. You're to let that run. Pull TP off that as well. So as you can see, it works a lot better on Forex. There's a couple of things that you got to keep in mind though, like for example, right here, if you were to take this buy right here, I would not put the stop loss that far behind. Right? So you just use basic logic here. Basically, if you were to enter this trade here, this stop loss is like way too far off. It's like 80 pips. So what I would probably do is I would just skip this trade because it's too wide. And you can see that this big drop right here probably happened because there was news at that time. So you can see there's like medium news around this period. So I'd probably hold off. However, this one over here would be one that I would possibly take. Or either of them, right? So like, for example, there's an entry right here. It's green and green. It's a valid entry. You put the stop loss right there, previous swing, change that to the next whole number, 20 pips. And then again, right here, there's another one. This is a green and this is a green. So you enter this right here. Previous swings right there, 25 pips. I'll probably move that to maybe about 30. So if you let both of them run, they both would have hit full TP. This one right here would have hit TP the first one, and then this one again right here. So yeah, if you were to apply this for Forex, I would probably use a 30-minute. And you know, these are considered like intraday swing trades because you're going to be holding on to them for a while. But yeah, I mean, there's going to be different rules for these here. I don't trade Forex anymore. The reason for that is because I don't like holding on trades for too long. Like for example, if you were to take this trade right here, you would have to wait, let's see, 3 hours for that trade to hit. It would hit, but I mean, I don't like holding on to trades for that long anymore. And I also don't like being on the charts all day. So the main reason why I changed from Forex to US 30 is because I like trading during a set time. Every morning I trade from 6:30 to 8. That's pretty much it for me. I catch a few trades and I'm done for the day. Before, if you were trading Forex, you'd have to be on the charts like all day because you have to check every so often for these entries. And it's just not the way I like to trade anymore, right? Because it diminishes your quality of life. Honestly, if you're sitting at your computer all day, it's like working a normal job. For me, I like to trade in the morning, be done, and then just go on with my day. So that's the main reason why I stopped trading Forex. But as you can see, the strategies still work perfectly fine if you do want to trade Forex. Although it's just not what I like to trade anymore. All right, so I think that's it for that question right there. Let me see if you had anything else, B. Scroll down a little bit. B said also quick question on Asia session. Since you go for half TP, do you set your stop loss to 150? So I usually do sometimes, B, but I don't trade Asia session anymore. The reason for me not trading Asia session is because the spread's too wide. So if you guys remember, I started an MFF account and the spread is crazy on MFF during Asia session. Like I think the spread's like 300 pips. So if your TP is like 100 pips and you're going for 100 pips, you would have to technically lock in like 400 pips because you'd have to cover the spread and then you'd have to also reach your TP. So I personally don't trade Asia session anymore, but I mean, depending on your broker, you can set it to 150 or you can just leave it at 300. Because the thing is, I mean, it just really depends on how you want it. Or no, actually, because we're going for a smaller TP, you're right. Sorry, I kind of blanked out right there. I would make the TP, I would make the stop loss smaller, but I would also make the TP smaller. So they both get half. Instead of going for 100 pips, I go for 50 pips instead. But I don't really recommend you guys trade during Asia session. It's just spread's too wide and the market is usually pretty dead. So, I mean, going back to US 30 over here, see if the market is actually moving. So as you can see right here, this is Asia session. It just opened right now. And I just don't recommend you guys trade during this period. I mean, if you guys want to trade, you guys can, but I would personally just sit out the market. So you can see right here, you have a huge push of volatility when the market opened. But then at this point now, it's probably just going to range sideways. So yeah, when I do trade US 30, and I'm only trading my FTMO, it's usually FTMO and my personal. But both of them kind of suck because the spread's still pretty wide. So what I would recommend is if you are going to trade it during Asia session, pull up your bid ask price and then see how much is the spread. If the spread's over 40 pips, then I just wouldn't trade during Asia. Because the thing is, if you're shooting for 100 pips, here, let me just show you an example. So say, for example, you were to take a buy here. Not that you were going to take this buy, but I'm just going to show you an example. So you're going for 100 pips, right? And your spread is like 60 pips. This is how far you actually have to go to get out of the trade. So even though you hit your TP, you still got to cover the spread. So what happens is if your spread's too wide and you don't get that far to, cover your spread, it'll just reverse on you. Even though it technically would have hit your TP, you would still be stuck in the position because your spread's too wide. And this is talking about a good spread. This is like FTMO spread. If you're trading on like MFF, your spread's going to be like 200 pips. So your spread's going to be like way out here. So you'd probably win the trade, but your spread's so far out that it's going to be impossible for you to get out because you technically would have to go all the way up here before you close out of your position. So I would, me personally, I would just recommend not to trade during Asia. That's usually where people lose trades anyways. So I would just sit out of it. I mean, I'm not trading anymore, so that should be like a hint that it's probably not a good time to be trading. All right, let me scroll up again. Let me see your other question. And B said, I'm not sure if I missed it, but when you're looking for the intraday confluence for the 3 strategies to match, are you looking for it on the 10-minute or the 1-minute? I'm looking for it on the 1-minute. I mostly trade on the 1-minute now. I do trade on 3-minute sometimes, but most of the time I'm trading on the 1-minute. So for the most part, I'm usually just on the 1-minute at all times. Let's see. B said, usually even during New York session, when I look at my spread on MetaTrader, the spread is 110, or isn't this accurate? I think it depends on your broker. Which broker are you using? Because if you're using, I don't think the spread's that wide. I think it looks like 110 on yours, but it's technically 11 pips. Because yeah, 110 is pretty wide. Because if you're going for 100 pip TP, and we do it during the live, like you see me when I take the trades, if the spread's like that wide, we basically would be going for like 210 pips, which is usually not the case, because when it does hit TP on TradingView, it usually hits TP on my position, like it'll close it out. So I think it's technically 11 pips, because I think it might be 11.0. That's probably what you're seeing, because it doesn't have a decimal on there. So it might be 11.0, which is 11 pips, not 110, because I think that's like way too wide for New York session. No, it's not the same for MFF. The MFF is like way wider. So I mean, you can see from like Maddie's profits earlier. So if you guys remembered, Maddie was posting his profits from this morning, and the spread was just crazy on MFF. So if you guys remembered, so like this is MFF right here. He got negative, but on his FTMO, he got profit, right? So that's how you can tell the spread's like way off. Like even right here, he made a profit of 123, but here he made a profit of 762. So these with the dot cash are FTMO, and this without the dot cash is MFF. So the lot size doesn't matter. The spreads is what makes it different. The lot size is just because it's measured in micro pips, not mini pips or mini lots. Sorry, MFF uses micro lots. That's why it uses 60 versus FTMO, which uses mini lots, which is 6. So that's the difference here. These are mini lots and these are micro lots. So if you guys know the difference, so a 100 is a standard lot, 0.10 is a mini lot, 0.1 is a micro lot. So some brokers use standard lots. If you trade with, a lot of you guys trade with Hugo's Way, they use standard lot sizes. That's why 0.01 is equal to 0.1 or sorry, 0.01 standard lot on Hugo's Way is equivalent to a 0.01 micro lot on a different broker. So yeah, that's the main difference there. Yeah, but MFFs is just known to have like super wide spreads. That's the main reason why I didn't want to use them to begin with. And I don't know if I want to use it anymore because what I heard from a couple other people is that they started complaining about the same thing Funding Talent was complaining about back when they were around. So like what happened was not last year, but a couple of months ago, people were like taking advantage of like the lag time for Funding Talent, and then now people are doing the same thing for MFF. So you kind of want to be careful with MFF. I'm still going to use them, but I don't think I'm going to open another account with them. I'm probably just going to try to pass this 200K account if possible, and then probably just keep that, and then I'll stick with FTMO because I don't want to work with any companies that are like gonna raise any red flags like that. So something that you guys want to keep in mind. I heard that from a couple other people. Let's see, B said, yeah, I understand. Last question. I think when looking for the 3 strategies to match, you're looking for a momentum signal in the candle that breaks a high low or low right. So the pivot scalp matches to exactly B, 100%. So you're completely right with that analysis there. Let me see if I could find an entry so that I can kind of show you guys. I don't think there was one that happened today, or for sure there wasn't one. There might have been one during London. So let's see. I'm just going to rewind it over here. No, I don't see anything here during London either. Yeah, there wasn't an entry earlier. Let me see if I can find an example for you guys. Just replay it back here. Actually, this was today. I got to go back to like last week because there wasn't that many entries that were available this week. Yeah, there weren't that many entries that were available here, but yeah, you're right, B, with your analysis of that. Okay, so perfect. Here's one right here. So what B was saying right here is he was just confirming like what I was looking for. So looking at the strategies right here, high-low scalp, intraday, and pivot scalp. All right, so looking at this right here, this is what B was referring to with regard to what I look for when I'm taking these scalps here. So basically I'm looking for a high-low scalp. Right here, we have a low that's established. We have 1, 2, 3, 4, 5 candles that passed. So this is a low here. We have a price break and close below it. We're trading the direction momentum. We have a sell signal here. Pretty much all the requirements are met for the high-low. For the pivot scalp, there's a signal right here for a sell, right? We also want to confirm that price is below the pivots. So the pivot's right here, price closes below. This would be an entry for the pivot scalp. Lastly, for the intraday strategy, I don't apply this by itself, but I just use it as confluence. If this right here lines up with the trend meter right here, where they're both red, then in that situation, I would take the trade. So right here, I would take the trade, go for about 100 pips, and there you go, full TP. So yeah, B, This is exactly what I look for. I try to make sure that it matches with pivot scalp. So like pretty much all my entries are based off of momentum signal. But I also want to make sure that they also qualify as a high-low scalp. So if you guys are wondering like what I'm looking for, these almost always give me like a guaranteed win, like almost always. I usually only try to apply it during New York session. I'm avoiding Asia session altogether and London session. I mean, you guys can still trade during those periods, but just keep in mind that it is going to be risky. So I don't recommend trading those times, but if you guys want to, it's still available to you. But yeah, so that's it for that question right there. Let me scroll up real quick. If you have any other questions, feel free to drop them in the chat. But I think that's it for those questions right there that you've asked so far. All right, let me scroll back up. See if I'm missing anything else. Scroll quick. Okay, so D. I think this is it right here. Yeah, Delmas. Sorry, I just saw your question, your response earlier. Yeah, during the time of that entry that we were looking earlier, we actually took the variation for the buy. See if there's anything else here that I'm missing. See some D. D has a question right here. D said, I've been working on demo FTMO accounts to build my confidence and figured out where I was making mistakes. When I pass this demo, I believe I'm ready to complete the real challenge for 100K account. Would you recommend I start after January 1st, after the holidays? I don't want to be in the challenge and the market be too risky to take trades and not complete it. Wasn't trading US 30 last year, so I'm not sure how it gets during the holidays. So just wanted your opinion. So I've been getting this question a lot from a lot of people. From my experience trading during the holidays, it usually slows down right before Christmas Eve. So like on December 23rd, it slows down a bit and the market's like completely dead from the 24th to the 25th. So Christmas Eve to Christmas, market's pretty dead. And then it picks up slightly between Christmas and New Year's Eve. And then it dies around again on New Year's Eve, like until New Year's. And then the day after it picks up like nothing ever changed, like nothing ever happened. So, so D, I think, I mean, I'm going to be trading. So I'll be trading regardless. But for you, if you don't feel confident, then, maybe wait until January 1st. But it's really up to you, right? Because, you're the one that's going to be controlling the account. So if you feel confident, you can take these trades and you can be disciplined with like trading how you've been lately. Because, you've been posting your profits. So you've been doing pretty well the past couple of weeks, past couple of months. If you can keep that discipline, then you might be okay to trade during this period. However, if you feel nervous and you don't feel like taking it, then I would just wait till after. So I mean, it's all going to be personal preference. I'm familiar with the market, and I'm confident with like the trades that I'm taking, especially now because I'm sticking just to New York session and not trading Asia or London. So I'm okay with it. Because like the thing with us, like D, like you've seen how we've traded like the past week, right? The past week, I was able to have discipline not to trade during the entire week, right? So I traded literally Monday and Friday. If you have the discipline to like wait and not take trades when it's risky, then you should be fine. Like for example, here, if you were to take, these trades here for 1 week, you could lock in about, I mean, depending on your lot size, you're probably going to take a 5 lot. So if you took all of these trades here with a 5 lot, you could have passed your challenge, right? Like if you don't lose and you just focus on like specific trades, and then you pretty much take them all the full TP, you could have literally passed your challenge like last week if you just took those trades there. I mean, it's not always going to happen like that where the trades are going to be perfect, but if you're disciplined enough to just take the good trades, then I think you should be fine. However, if you don't feel comfortable, then obviously just sit it out or just do another demo. Do another demo during the holidays, and then if you feel comfortable, then when the new year starts, you'll be ready to go. Exactly. So D said exactly. I had hella discipline and still made great profit these past 2 weeks. So I think I'll be fine. Just didn't know if the market goes super crazy or something. So no, the market doesn't really go super crazy. For the Forex market, you're gonna see like some weird movements, obviously. But for US 30, since we're just trading during like New York session, like for like a couple hours a day, we're just waiting for those perfect entries. We're like fishing, right? Fishing for the perfect entry. And then we can like hop into it like you did with me these past couple weeks. I've been very consistent with my discipline where I'm not like FOMOing into trades. Like today, I kind of FOMOed into a trade, but it looked like a really good trade. If you guys remember during the live session, we saw that variation and then I hopped into it. We're not counting that as an official entry. Obviously, I have told you guys all the trades that we post here during the results are only trades taking during the live that I tell you guys that I'm taking. Like for example, today I took this variation here. I locked in X amount of profit, but this isn't going to be posted in the results because I try to be as transparent with you guys as possible. And the only way for me to do that is to only post the wins that we take during the live that I actually tell you guys, we should take these trades. And that's why we have such a high win rate because I'm so specific with like the trades that I actually tell you guys to take. Like obviously I tell you guys what's risky and you guys are able to take it. But the trades that I actually tell you guys, like, I'm going to take this, we should take this, then those usually hit. So, it's all about quality, guys. You guys want to make sure that you keep your trades quality and don't go for like, 100 trades a day where like only like 2 of them are quality trades because you can get lucky. Like anyone can get lucky trading, but having consistency to be like this all year round that's like where the real discipline comes in. So other than that, let me see if there's any other questions here. Yeah, I don't really see any other questions here. If you guys have any other questions, feel free to drop them in the chat. Alex, if you have any other questions, I know you're still here in the room. I just want to make sure that you because I know you're waiting for this live session. I know you really want to get the trading down. So Alex, if you have any questions, and I know you're new here, drop your questions in the chat. Anything that you need help with, if you want me to cover anything for you, you need help with risk management, trade psychology, anything like that, feel free to drop your questions. Let's see. B said, did you answer my previous question? Sorry, I had to step away. I think I did, B. Oh, wait, sorry. I didn't see your second question here. So your second question said, is it fine to use throughout the whole, wait, sorry, let me reread it. Is it fine to use throughout the whole of the New York session? I think you avoid 8 to 10, right? And then it's fine to continue to use. So you can use, you can technically use it all throughout the New York session. I just don't trade from technically I do trade sometimes. Like sometimes I'll get off the live session and then right before I step out, I do catch a trade every so often. So you can still catch trades around that period. So the reason why I don't trade during that time, if you guys remember, so let me just go over here real quick. And I'll just mark up the chart from this morning. So the thing is, you probably aren't going to find any entries around that time. Because so here's where we trade, right? From 6:30 to 8. And then you mentioned if I trade from 8 to 10, right? And I'll show you exactly why I don't. So from 8 to 9, do you see what happens here, B? From 8 to 9, and then from 9 to 10, nothing really happens, right? So this is our live session here. You see the bullish move, and then from 8 to 9, what do you see here? Nothing, right? Just go sideways. 9 to 10, sideways. So you can technically apply it during these periods. You're just probably not going to find any entries because the market is kind of like flat during that period. Then from like 10 to 12, you see the mid-market reversal right here, right? So generally, I don't trade during these periods because there just isn't anything to take during that time. You can apply, if you see something there, yeah, perfect, you can take the trade. But for me personally, I don't really see anything happen during this period because usually I'll be here with live with you guys from like 6:30 to 8. This is usually my downtime. I usually take a break during this period. I go do what I need to do. I come back around like, right before or after 10, and then I'll probably take like one more trade if I see something. So let's see, your question was, so avoid 10 to 12, only trade 8 to 10 if you see a good entry. You don't necessarily need to avoid it, but if, for me personally, I usually just avoid it. So, but it's not always going to be like this. So like this over here, let's go to another day, because today was perfect. Like you can see how it moves. Directional, consolidation, consolidation, reversal. Let's go to another day, like the not the third, because the third was Friday. The second. Okay, let's go to the second. So let me just mark it up again right here, because the thing is, it doesn't always move like that. There's like some days where it actually continues to push. So to 8. Eight to 9. I'm just going to see if there's any entries around this period, just to show you that there's still trades that are available. It's just if you find them. And then 10 to 12. Because I don't want to tell you not to trade during this period, and then you see entries and you're like, you miss it because I told you not to trade during that period. Because I don't avoid it. I just don't trade during that period because I take a break during that time. So let me just go over here real quick. And let's just replay it to this day, which this was Thursday of last week. Let's just see if there's any entries around that period. All right, 8 to 9. Let's go here real quick. Yeah, no entry there. Like this right here. Like, so there's an entry. I mean, I probably wouldn't have taken this trade. I think micro's bullish this day. So I wouldn't have taken the trade here. However, you can see that there's still an entry here. I mean, this doesn't fit the requirements that we were talking about, but there's still going to be some scalps that come up, obviously, right? So looking at this right here, this happened between 8 and 9. This is just a high-low entry. It's not necessarily an entry with all the, confluences that we're looking for, but you can see that it still hits. Like there's still going to be entries that happen during this period. It's just, you're probably not going to find very many that fit all of the requirements here. So other than that, let's see. Yeah, nothing here for this on Thursday. I think we were looking for a trade here. If you guys remember, we were looking for a trade here and it never came. There was actually a high right here. I don't know if you guys remember that. This was last Thursday. We were waiting for this. We were literally just sitting here and waiting for it to fill, and it like closed right below it. So we didn't have an entry there, but then it closed right after, and then that would have been a high-low entry. So as you can see right here, you don't see very much movement, B. But if you do see something, I mean, feel free to take it if you feel comfortable. It's just I don't think you'll find anything here during that period. So yeah, I mean, short answer to your question is yeah, if you want to avoid 10 to 12, you can do that. If you want to trade how I trade, I generally only trade from like 8 to 10 anyways. So yeah, if you want to stick to the way I'm doing it and you want to have high quality, I would just stick to 8 to 10, or no, sorry, 6:30 to 8. But if you want to be risky and you want to, take more trades, then you can very well trade from like 8 to 10 as well, or 8 to 12 actually. No, actually 8 to 10, sorry. Confusing you here. Yeah, 8 to 10, because 10 to 12 is usually where the mid-market reversal happens. Yeah, no problem, Alex. I just want to make sure that I can help you with it, because we did talk recently and want to make sure that you get this stuff down. So yeah, guys, I think that's it for the questions. Is there anything else here? If you guys have any questions, feel free to drop them in the chat right now. I've been on the session for about 2 hours, so I'm kind of losing my voice. I gotta go get lunch or dinner or something. I drink a lot of water, but Yeah, no problem, B. If you guys have any other questions, feel free to reach out through email or Telegram. I don't see any other questions here. Let me just scroll through it real quick. I want to make sure that I didn't miss anyone's questions. I did mention that I wanted to go over the strategies in detail today, but we've been on the session for some time, so we'll say that for next week. I'm going to try to do these sessions with you guys every week to make sure that you guys get everything down, right? Because I know it's a little bit confusing because we made the change from Forex to US 30 within a year, 2 years time. So if you guys are just joining K2, you guys are probably not familiar with like US 30 or like how we trade now. Things have changed, right? Obviously the strategies still work perfectly fine. So let me just show you, let me pull up the the actual course, the strategies course. So got this right here. So I just want to clear up some things. I'm going to redo the course. Well, I'm not going to redo it completely, but I'm going to redo a lot of it to make things a bit more clear. I know they're clear already for if you guys have been here for a while, but like, for example, here, so these strategies here, if they're specifically for US 30, they're going to have US 30 in the name. So right here it says US 30 breakout, specifically for US 30, right? The scalping strategies here, these work for pretty much all assets, not just US 30. You guys can use this for everything. This daily strategy only works for US 30 because it says US 30 there. The SR strategy, this is meant for Forex. But I know if you guys are new here, you guys will see that like this intraday strategy. This strategy was created like 5 years ago. It's meant for Forex. I should probably change it here to say, mainly for Forex so that you guys don't get confused with it. However, I don't want to push you guys away from using it with US 30 because you guys can see that it does work. It's just you have to use it on a different time frame. And during specific periods of trading, like New York session. But yeah, basically, if you guys are new here, anything below the daily is all going to be Forex. So these are all Forex strategies here, and they all work perfectly fine. We'll have this session once a week so that I can, make sure that you guys are actually getting everything. Because I want to make sure that you guys are successful, right? You guys see everyone here profiting, and I want to make sure that everyone's on the same page. So if you guys do have questions, don't feel afraid to ask, whether it be me personally or whether it be you asking in the chat, because we're all here to help you guys out. So if you guys do have questions, feel free to reach out. Otherwise, we'll set up another mentoring session for next week. I'll have to check my schedule. Let's see. Let me check it right now. So we can probably have that mentoring session. It's going to be probably the same days, Monday or Friday. So I'll get back to you guys as we wrap up the week, and then we'll set up another mentoring session next week. So if you guys don't get your questions answered today, it's completely fine. We'll have another session next week, and I'll try to do this weekly with you guys to make sure that everyone's on the same page, because I want to make sure that everyone here is killing it. You guys have seen the profits here from today. Like, Rick is killing it. Where's Rick at? Is Rick here? Yeah, Rick's actually here right now. So guys, look at Rick's profits. This dude made 8,000 today. Rick's had his ups and downs, but Rick is killing it. So I want to make sure that everyone's on the same page. Not to just point out Rick, but like, Orain here too, up 500 bucks for the day. Sisu up 9,000 bucks for the day. These are all different people. Angela up 1,000 bucks for the day, and she's trading GJ. She doesn't even trade US 30. She applies the pivot strategy for GJ, and it works perfectly fine for her. Salorum here up 1,500. These are all different people. Maddie up 1,500. His other account 1,400. Maria passing her challenge right here. So guys, I'm trying to help you guys out here. I can't help you guys unless you guys ask questions. So if there's anything that you guys have problems with, make a list of it. So like every time we have this session, just drop your questions in the chat, and then I can clear up anything for you guys to make sure that you guys actually understand the stuff here. Paul here, 2,000. D over here, you saw D in the chat. She made about 700. Dell, these are all different people. So I want to make sure that you guys are getting it. And if you guys didn't get your questions answered, just wait till next week. So other than that, guys, I'll see you guys on the live session tomorrow. And if you guys have any other questions, feel free to reach out. Otherwise, just make a list of questions, and then we'll pick back up next week for the next mentoring session. So have a great rest of your